Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Thursday, July 16th. Quick look at the data today. Retail sales pretty much on expectations. Headline 0.2, control group 0.5. Just steady, nothing threatening there. Jobless claims at 208 are subdued. The 215 is about the midpoint of what it's been, between 200 and 230. So subdued, that's generally a good sign that, the job market remains at least steady, if not reasonably healthy. The Philly Fed was much stronger than expected. I mean, this headline number is the best since November 2021. You've got business conditions are down, but capital expenditures are also down, but employment is up, new orders is up, prices paid about what it was. But this really is a strong read from the Philly Fed. Now it's 1 month, so we'll have to see if anything continues with that for the next month. Okay, for earnings, Taiwan Semiconductor leads everybody. Their ADR is U.S. listed. They beat nicely on pretty elevated estimates already on earnings, and they missed the estimate on revenue by a tiny little bit. But I think revenue was up a huge amount year over year. So maybe not such a big deal. But the market is punishing them a little bit, down 3%. But that's more on the article we'll talk about. They announced $100 billion in new capital expenditures. United Health, big beat on earnings, a little bit of beat on revenue. We've looked at this in the past. Thought there might have been some value in it. It's come back up a lot. So if you bought it down near the bottom, this might be not a bad time to take a little profit. We're still waiting on GE and Netflix. Abbott, beat by a little bit, but the stock is up 11%. So, I think there might be some new drugs or some pipeline stuff. And then U.S. Bancorp, had nice little beats, and the market, does like up 1.6%. Okay, looking at Korea. Well, we had a 6% rally yesterday. Today we have a 6% drop. It's still nasty, chopping. It hasn't really consolidated yet. It may, we still need some sideways movement and perhaps a little less volatility. I mean, if you're doing 5 or 6% every day, that's just and there are people in the leveraged ETF department areas. That's hard to invest. Okay, mid-afternoon here, U.S. futures are down, and that's mostly because the semiconductor range, as we'll see in another slide, everybody is off in the semiconductors. SK Hynix down 11% today. I mean, the other day it was almost 190. Now it's trading 155. So a lot of volatility. We'll see how that, SK does tomorrow. Yields are, back up a bit after a pretty decent 2-day rally. The dollar's higher after, being down the last 2 days. Energy, mostly lower except for diesel and heating oil, crude oil, Brent. Let's see. They were down yesterday until the close and people bought them up. I wonder if we're going to actually see a little buy into the end here. Gold, disappointing. Gold is down under 4,000. Looks like it'll probably close that way. I think there'll be more people worried about it. Silver down a fair bit as well. And we're still, we're seeing a little bit of a retreat from crypto after having done well for the better part of a week. Okay, so here's the S&P 500, down 0.5% today, and it's all semiconductors, right? NVIDIA down, Broadcom down, Micron down, AMD down, Intel, everybody's down. And that's, technology that's down 2.5%. Obviously semis are not all of technology, but it's the biggest part of it, dragging the entire index lower. Now, one thing I do want to look at, and we haven't looked at this in a while, is CNN's Fear and Greed Index, and it's still in fear. It's it's not like the market's really doesn't according to their calculation anyway, is really confident. And I've overlaid the last year of the Fear and Greed Index. So this up here is extreme greed. This down here is extreme fear. Against the S&P 500, and you can see right here we're nowhere near extreme greed. When you see extreme greed, sometimes it may give you a clue. So the market's a little bit worried. So it doesn't mean it's over exuberant. So, the retail buying has been very strong. But I want to keep an eye on this. But the fact that we're not in extreme greed territory, I think is actually probably a good thing. Okay. So, every Wednesday we look at distillates, right? Distillates is basically heating oil. And why do we look at that? Because heating oil is, as I mentioned before, diesel. And they're saying a sharp drop in diesel supplies, according to the journal, threatens to rev up inflation again. So last month inflation fell by a bit, which we covered the other day, but because diesel supplies are low, that could reverse the trend and boost everything from dog food to lumber. Diesel futures have surged 20% since the beginning of last week, and will probably keep climbing. Now, the national average for a gallon of diesel rose to over $5 on Thursday. Could get another 25 cents a gallon soon. Not up at the highs, but uncomfortable. And the thing with higher diesel, it relates to everything that gets moved around, from lumber to pet food, and this isn't good for President Trump. So the question is, how long will he continue to push Iran? And we'll talk about that in a little bit. But so remember yesterday we talked about diesel inventories in the U.S. actually had a 4.6 million barrel build. That's good, but overall they're down 10% since the beginning of the war and the lowest level since 2003. And this is why we look at heating oil. So, just a quick look at Brent. Brent's consolidating around 85. I don't know what's going to do tomorrow ahead of the weekend. If we get a drop tomorrow, that'll signal that the market's not really that worried. If they buy it into the weekend, that's going to tell you something. So tomorrow's price action in Brent will be interesting to see what the market is thinking. Now, even though we're not full-fledged war, we're hitting a lot of things, and we're way lower than we were when before the ceasefire. So that says that does tell you something. Again, gasoline is down like 3% or so, but heating oil is down only a tiny little bit. And again, this is why we look at this chart. At the pump, which is very visible to Americans, an average 5-cent pop, which is a lot, and it's up 15 cents since the low, since the hostilities restarted. So I think over 4, that's going to be that's going to be a mental signal. And where I'm getting gas, we're we're just below $4. Okay, Axios reports this. I thought a very good article on the 3 men racing the hardest to build like the best AI. Demis Hassabis, who's Google, DeepMind, Sam Altman, and Dario Amodei of Anthropic. They all agreed that the frontier AI needs to be regulated as soon as possible. They've come on the record and basically saying more or less the same thing. We need some kind of regulation. And Hassabis, who's at DeepMind, published a proposal that everybody seemed to have liked, even Altman, the Microsoft CEO, and Elon Musk. So basically, what's happening right now? The Trump administration is basically, they don't want to regulate, but they feel like they have to, because a hands-off approaches, it doesn't work, because some of these things could actually be, pretty substantially dangerous to cybersecurity, maybe even to the country. So basically, there are 3 ways people are looking at it. Anthropic wants an FAA for AI, so a federal agency that has the power to block a model's release immediately. That's what got done to them, though they felt that it wasn't justified. Google wants a FINRA, which is basically, FINRA is the industry body that, with government oversight, that looks after the industry. And then Altman wants something like an IAEA, which is the International Atomic Energy Commission, a U.S.-led international forum that certifies safety standards. So of all of these, I do hope that this is the one that gets approved, because as fast as AI is moving, IAEA, U.S.-led international forum, that's just going to take too long. And the U.S. is the leader. China's trying to catch up. I think we need to take care of this. The problem with an FAA for AI is, who's going to be at the FAA? Are they going to be the right people? They might be the right people now, but they may not be the right people with the next administration. Although, you do feel like that's a little bit of time away. So I think the best one is FINRA. These guys manage it themselves with government oversight. Okay, exploring why I've been thinking of why is Trump, attacking Iran so vigorously. Telegraph, reported that the U.S. launched a Hellfire missile at a tanker in the Strait of Hormuz at a ship. They warned ships before, they've shot at ships before, but they threw a missile in at an oil tanker, and that's a big deal because apparently the ship ignored multiple warnings, not ignite. I think that's a typo. And U.S. strikes have hit northern Iran, and Iran has retaliated by aiming at missiles at U.S. bases in Jordan, Kuwait, and Bahrain. So why is there a sudden pickup in attacks? Well, actually, the Telegraph had another piece that I thought was very good and helps us understand why. The hidden message behind Trump's latest wave of Iran strikes. We've hit some of their ports. These port cities are losing power, and so analysts are thinking that the reason the U.S. is doing this is expanding their strikes to say, you know what, we can go further. We didn't hit everything that we could hit. We certainly, could go further. Now we are willing to go farther. And, there's a little bit of a threat in the air than just pure military targets. What's interesting is railroad bridge in northeastern Iran that was transporting oil to China primarily has been hit. So that spigot of income has been turned off. So, the other ways that the U.S. could expand its attacks is carpet bombing Iranian ports to stop small civilian craft from being commanded by the Iranians to, check who's crossing the strait so they can attack. So a very good point is Iran is playing for time and Trump is playing for pain. So who will prevail? Basically these attacks over the past week have said, you know what, we can really hurt you. We mean business. Although some targets are being saved for later. But in truth, I don't know if the U.S. can win this one, because what can be done to really hurt the IRGC? They don't really care about civilians as long as they're okay, and they're really hard to hit. So this is, as we've looked at multiple times and we've said, the Strait of Hormuz will become less important in the future. And the Journal has a good article about how Chevron is working with Iraq to create an alternative for Iraqi oil. Iraq sits way up at the end of the the Strait of Hormuz, the Persian Gulf. So all their oil basically has to go through the Strait of Hormuz, which is a problem. So Chevron is going to sign some preliminary deals tomorrow to invest in Iraqi oil fields and possibly construct a pipeline that connects Iraq's oil with the Syrian coast far to the west. They could rebuild the pipeline from Kirkuk in northern Iraq to Syria, port of Banias in the Mediterranean Sea that was shut for 2 decades after it was damaged in the invasion in 2003. So, these things take a long time, but this is a good sign. And Chevron is looking to for a stake in one of the world's biggest onshore fields after Russia's Lukoil was removed earlier this year. Iraq, the second biggest producer in the Middle East, normally 4.5 million barrels per day. Not much of that is getting out right now. So, work around for the future. We might look at some U.S. energy names in a weekly in the coming days to see if Chevron is a good one to invest in. So, Taiwan Semiconductor, right? Really good report. But they said they were going to invest an extra $100 billion in capital expenditure. And that seems to have gotten the market really into a tizzy. They don't like that. They're like, can we really, afford this? Does it make sense? Strong customer demand, but, again, rising capital expenditures, Facebook and other companies have been punished for that. It looks like they're punishing TSM right now today. Down 2.7 right now, over 3% earlier, despite a really good earnings report. So, and they have really great guidance. The chip maker now expects 2026 revenue to grow over 40%, surpassing prior forecast for more than 30%. The guidance was expected to be a 30-35% range. So again, the company makes main supply of chips for NVIDIA, also Apple iPhones, and AMD. So a question is, can they, is this really a good investment? The market is still worried. So let's look at the chart. They've had a phenomenal year, but trailing PE is 33, forward PE is 20. That's not bad at all. I think if you get a further pullback in the Taiwan Semiconductor, that's a name that you can buy. I really don't see demand falling off, at least until the end of next year. Thanks for joining me today. I'll see you again tomorrow.